Welcome back to another video. This is just going to be a review. We're going to be reviewing what the fuck led us to our daily bias going into today. We had a bearish daily bias. We were expecting a sell-off day, and yeah, we're just going to be reviewing price action and what led up to us getting that daily bias in the first place. So starting out, I'm going to delete all these drawings and we will just go over these first. Before I delete them though, let's drop down and I'll show you exactly where I took my trade. Right, so here's the 15-minute chart. Now, however, we came into the market with a bearish bias on the day. However, my money was made counter trend trading, and it was right in here within this pullback. I was expecting, some sort of pullback after we had this move lower, and I was able to capitalize on that counter trend. And unfortunately, it was in the lunch session. I don't recommend trading the lunch session, but if you know what to look for, and you're paper trading like me, and you're just learning, take the trade. Fuck it, why not? Opportunity to learn, right? So in the lunch session, I was expecting us to come take out some sort of buy side liquidity at some point. What led me to expecting that? Right here is New York session open. We opened, we set a high, we traded lower, we could not trade back up to this high, and then we just sell off for pretty much the whole morning session leading into lunch. We got down here. This is an old fair value gap. We'll get into that in just a moment. But at the bottom of this fair value gap, what happened? We had a change in state of delivery. We then took sell side under that. We had displacement to the upside. After this little change in state of delivery, I was interested in what would happen if price were to come take out buy side above this high here. So we took out buy side above that high there. We created a fair value gap, and this was one entry here. This was not the entry I took because I wanted to see more displacement to the upside, because on a day like today where we're expecting to sell off, this could very easily just go and continue to take this low. So I wanted extra confirmation, so I didn't take this trade right here, but this is a trade you could have taken if you're paper trading and you're doing it just to learn. So into this fair value gap, after we took out this buy side liquidity, where are we looking to target? Above this high, possibly inside of this fair value gap, because above this high is already in this fair value gap. So we're just looking to see price come into this next fair value gap up here. What happens after this retracement? We go right up in to these old highs right here where this fair value gap rests. We made it into there, and then right in here, I believe the specific candle I took the trade on was this one here, right? Why did I take the trade on this candle here? What have we done? Well, we've already retraced into this fair value gap, moved higher. On this low that takes out these previous lows before it, once we take these lows, I'm expecting us to go take some sort of high, some point soon, possibly, because the direction of the trend is likely to be up at this point, right? We had our change in state of delivery here. We had a market structure shift here. We had a continuation here. This is second stage accumulation in my eyes. So we take this low here. I'm expecting to see some high be taken. We have this high here that is relatively equal with this previous high over here. That is our form of buy side liquidity. So if we were looking for price to continue up, where would we be looking to target? Above this high and into this fair value gap here, into this fair value gap here. And what happened? On the next candle, after we take this liquidity, we close higher. We sweep one more time, and then we go run above buy side here. Unfortunately, this was not the move that unfortunately, you're not going to nail every trade exactly on the head right when it's about to run, right? So our entry was here. We run above this high here. What could have happened here? We could have very likely came back and retraced deeper. But what's protecting us? Well, we have an order block here. And then this move right here, I'm almost certain looks like a higher time frame fair value gap. So let's jump up to the 2 minute and see if we're correct about that. Well, boom, there it is. One time frame up, we have a fair value gap there. That's protecting us. So order block, fair value gap. So we have some PD arrays in our favor. We can mentally prepare ourselves for price wanting to dig a little deeper into either one of those PD arrays there. However, on a day like today where it seems to be a bit volatile, we could also just see this continue to retrace or continue to run up. So we took this high here. Where do we come back to? Below these lows. But if that's not good enough for you, you want to be very, very precise on which low we take. Boom, we take this low here. This is our sell side liquidity. So now sell side has been taken, right? Where do we look for price to want to go next? Back towards buy side. And that's exactly what happened. We create a fair value gap here and we never retrace into it until we take it out here. Now on this trade, right, I said my entry was here. It was around here. I'm not gonna say that's exactly where my entry was, but it was around there. Where are we willing to place our stop loss? Honestly, I was on tilt because I had already taken some losses on the day. And yeah, I probably would have let this run just a little bit more than what it should have. So really, if you want to be conservative as possible, and give your trade room, it should be below this low. You can place it all the way down here, but that's just really, really wide. And I'm not opening myself up to that much risk. So my first target that I was looking for, once we break above these fair value gaps, was I want to see what's going to happen when price runs into this previous order block here. And very specifically, this high here. This is my next form of buy side, and that was my first partial, and that is 1.36R away. Boom. It's not negative risk to reward, right? You already get 1R in there. Be happy. This is also, how many points is this? That's 52 points. More than enough. More than enough. That's 52 points on NQ. More than enough. Right? My next target originally was above these highs here. If you look, we do take those out, but very sparsely. Right, that was where I wanted to take the second half of my trade off. However, when we got to this high, I didn't like how price had slowed down right here, and I knew the bias was bearish on the day already anyway. So I moved my second partial to just below these lows. And if you look, I'll make this one yellow. If you look on the very next candle that broke this high, we went ahead and took that off. This was another 1.7R on top of that. What was it? 1.3 on the first part of the trade, and that added another 66 points. So we had 52 points and 66 points. That's more than enough to be fucking happy with. Originally, we wanted to target into this fair value gap that's resting right here and above this high right here. And if you see, retrace right into there. Right into there. Very, very close to 50% of that fair value gap. We don't hit it, but we don't even get a candle close in it. And it's a bearish day. So you can expect price to want to, at some point soon, probably run on sell side. So I'm happy with taking off here. I'm just not happy with how I ended up in that trade to begin with. I knew the bias was bearish on the day, but after this sell off here in the morning and we shifted structure here, as you can see, I used the exact same framework from down here, right? So change the state of delivery, market structure shift, The only thing is we just didn't go as high on this one. So I believe this was my first loss in here. My second loss was in here. Yeah, that's exactly how it was. My first loss was in here. My second loss was down over here. This one was a bit bigger than the first one. After those two trades, I was down more than I'm happy to admit, but full transparency here, I was down 789 paper money dollars after those first two, and that is way more than I'm willing to risk. As you can see, I finished the day up $307, so that trade was like $1,096 or something like that off of just this one trade right here. And again, like I said, I feel ashamed to admit it, but on this trade, like I was not following proper risk rules. I went on tilt after losing $789 on these first two trades, and I put on way more size than I should have on this second trade. This time it ended up playing out in my favor, but there's a possibility and a chance that it may have not, right? The idea of me paper trading this account is to be emulating what I'd want to be doing on an actual 50K funded account challenge, right? So the goal is for me to grow this to where you could take a payout on an actual 50K funded account. And as you can see, like I said, I was already down $789 and we're up 307 on the day. So just subtract 1,096 from this, and that'll give you what I was down. I was down a pretty solid amount. It would have been close to about 25% of the total withdrawal on Top Step, and that is not something I feel comfortable with. Fortunately, we made it out of this trade, but I over leveraged, and this is just a trade that I would not have taken had this been an actual account. I would have been on edge after this first move, and two, it wouldn't have been a trade I could even take. I was able to take this because I'm on a paper account, and I was able to trade more contracts than you'd be able to trade with a 50K account in the first place. So shame on me for doing that, but this is the logic behind that trade and why it is a trade that I would take 9 times out of 10 again and again, even if I was stepping outside my rules. I don't want to step outside my rules. I really don't want to do that because I'm a solid trader when I follow my rules. To begin with, it's when I step outside of them that things then turn into something that's not trading. So why the fuck did we have a bearish bias on the day to begin with? Now that we've done that little bit of a review, so that was the trade I took. I already told you guys I took a loss here trying to go long and trade back up to this just somewhere, and then again I tried to go long. I think somewhere right in here, and then I got fucked out of it there. But yeah, let's go ahead and get into why we had a bearish bias in the first place and why we were expecting lower prices and why we were expecting today to be a sell day to begin with. So the first thing going into the week I always do is start out on my higher time frames, whether that be the monthly, the weekly, or the daily. I always like to try to at least come out to the weekly and see what we're working with. So bear with us, bear with price right now. Sometimes this shit on Webull tweaks out, and like the current candle will not be reflective of what it actually is in that moment. But all you have to do to fix that is just refresh it type shit. Just change time frame and change it back. That being said, coming into Sunday, here's what I'm looking for. I come out to the weekly, see where we are, what PD arrays we have, and where we're probably likely to target. The first thing we're able to notice is we have this little inverse fair value gap here, and we have a fair value gap here. Now the thing with this higher fair value gap above us, it's also resting within this weekly order block as well, right? And then if you want to go even further into ICT concepts and PD arrays, there's also a breaker block there as well. Go ahead and stack the confluences. Just gave you 3. But we're looking into this area here because of this order block and this fair value gap. And we have all this movement up. We really took these lows down here. And if you want to, be specific, like what do we have here? Swept sell side, move up, where we likely target. First off, this candle's high. Why this candle's high? What do we do? Took the low, closed within the range. Where are we probably wanting to go? Towards this candle's high, right? So we moved there last week. This week, we're probably likely to take this candle's high. What happens this week? We took this candle's high, right? Where are we likely to go after taking this candle's high? Well, we have a fair value gap here. So let's see if we can make it into this fair value gap, right? So we're going to drop down into a lower time frame. I'll leave this on there for right now. That's just that candle's high. We'll leave that on there for right now, right? So this is our order block. This is that fair value gap. I'm going to delete the order block level because that's not what I was paying attention to. We're going to focus on that fair value gap that we had. If we look at the daily, there's also a daily fair value gap that rests pretty much within this weekly fair value gap. So we've stacked multiple confluences here already. We had 3 PD arrays on the weekly. Now we have another fair value gap here on the daily. We have this high here. This is an old high before this move down, right? We're looking for old highs and lows to be taken out or us to be retracing into old PD arrays always, right? So we have this old high where we could be anticipating it to be the draw. Remember, this is Sunday night. We're coming into the market. So these 4 candles here, they're not printed. We're just wanting to know where could we see price go into. And these are the first things we see. So fair value gap, old high. But what happens when this old high here, on this same candle? Well, these 2 candles, really. And you really could look at these 3 candles. Really, this is a fucking order block here. Honestly, I wasn't even paying attention to this then. Like, I didn't even see this candle, right? I wasn't even paying attention to this. I was more focused on this volume imbalance right here that we have. And if you look, fast forward to today. This is hindsight now. Where do we stop at? Right in there, right? But keep in mind, Sunday night. First place we're looking for, this old high. If we get above this old high, we want to see us draw into this daily volume imbalance. If we get above this daily volume imbalance, we want to see us draw into this old high. If we get above this old high, we're already within the previous weekly fair value gap. But where do we go? Maybe within this old daily fair value gap. Do we get there before price looks to be turning around? No. But where did we get to? Into this daily volume imbalance. Going into let's continue getting into this shit. I'm sorry if I start rambling or like just go off topic. Just stick with me. I'll get back to it. Okay, I'm just a human. My mind wanders sometimes. But Sunday, this candle's open right here. We're going to drop down into the 4 hour. Really, we're going to drop down into the 1 hour. I don't like looking at the 4 hour as much. I like looking at the 1 hour much more. That's just me. The 4 hour may be your shit. For me, I don't spend as much time on the 4 hours as I do on the 1 hour. I get a lot more information personally from the 1 hour than I do the 4 hour. So, coming into Sunday, we hadn't taken this high. But between Friday's close and Sunday's open, we already gapped up. I'm just looking at the dates real quick. Yeah. So this is Friday's close right here. And then this is Sunday's open. What is this called? This is a new week opening gap. And we're just going to, for the sake of us right now, we're just going to pull this all the way out. Okay. So, new week opening gap. I could drop down to the 1 minute and draw it on the 1 minute. It's gonna be different if you use lower time frame. When I'm going into this, I do use the 1 minute to get the precise level. But for the sake of just this analysis right now, we're only going to use the 1 hour. But if you want to get the precise levels, you drop down into the lower time frames. And I go down to the 1 minute. really because I don't get the second charts on Webull yet. But I go down to the 1 minute, and that's where I mark it. And if you would have done that, you would have seen on Sunday we had this opening gap here. Right? Besides the point, we're trying to figure out how the fuck did we know what to do today, and where the fuck were we looking at today. So we had Sunday's opening gap. Sunday gaps up, we trade below it, and then we get displacement above, right? What does this displacement above do? It takes out that old buy side level. If we go back to our daily, right? We were looking at this as buy side. Why are we looking at this as buy side? Because, mind you, this is Friday's candle here. Where's price likely to be drawing? If we're going to take out, we're looking for price to take out highs. It could either take out this fair value gap or take out this high. We don't know what. It could take out either or, right? So I may have just lost some of you motherfuckers there. I kind of lost myself, but bear with me. Bear with me now. I'm just showing you how I can get these fucking levels at trade to, right? So Sunday, opening gap, trade below it, and we go take out buy side. This is fucking Monday, Tuesday, Wednesday price action. But what has happened, right? We continue to trade higher. We trade into, what do we trade into? This volume imbalance, right? On the first day, what do we do? On the first day, we trade into this volume imbalance. After Monday, so Tuesday, we trade in, and we get, of course, I knocked my headset out. But we trade into the volume imbalance, and we trade out of it. We get a little reaction out. Okay, cool. What could be happening now? We don't know. We could want to see it continue up, but we have our eyes on possible weakness stepping in, right? Because we got a reaction in an area we're already expecting a reaction out of. Wednesday, what happens Wednesday? We open and close. Well, not open and close, but we open low. Set a high above the volume imbalance, and then we close. Where do we close at? Exactly 50% of the volume imbalance. Pretty much exactly. It might not be exactly, but the daily candle, it looks pretty much exactly at that volume imbalance. Mind you, that's yesterday's candle, Wednesday. Today's the 22nd, so going into today, we had this. We're going to mark out, and we're actually going to drop down to the lower time frame real quick to mark this out. We're going to be marking out the new day for today, the new trading day, right? The true new day. I don't know if the true new day is the midnight or the day future starts trading. Whatever the fuck you want to say is the true new. We'll do the 1700 candle. Usually I do the 01 candle on Webull, but we'll do the 1700 candle. But 1801, whatever that is in New York time, marks out a new day. Let's go back to our 1 hour. So coming in today, when I sat at my computer last night at something o'clock in the morning, or something o'clock last night, something o'clock last night to something o'clock in the morning, this is what I had seen, right? I already saw us have a nice little reaction out of this old volume imbalance. We have a 1 hour fair value gap here. We did some trading within there. Again, we take the high of this volume imbalance. We get this nice little reaction out. We take out some sell side here, but we left behind sell side here. That's within this old fair value gap. Here, this is a 1 hour fair value gap, right? So we left some sell side below here, right? So we took out sell side here, but we did not take out sell side below here. So this becomes a target as sell side liquidity. It also lines up with roughly 50% of this old fair value gap. So price may want to come back there, right? If we're looking at this as buy side of the curve, once we enter sell side, this may be a target. Maybe. Possibly. So coming into today, we opened We set a high. We'd already taken out all these highs. And then we had this move lower. Now, this right here is the false move. Actually, these two moves, right? This lower and this upper. These two moves are the false moves. This one here tricks in new sellers, which, like me, I was looking to short. We had a fair value gap here on the hourly created. I'll make this one blue, right? And we'll zoom in a little bit. So a little hourly fair value gap created there. And yeah, I think I was trading between these times in the overnight session. It may have even been, yeah, 2-3 o'clock. That seems about right. 2-3 o'clock in the morning. That I was definitely trading this shit. So by then we had already created this fair value gap, and I was expecting to see, yeah, especially right here. I was expecting to see us run below this low. That's not what happened. We said fuck you, and we continued up again above that daily volume imbalance. So if you're a buyer, where are you likely looking for price to go towards? This high here. We do that, right? What do we do as well? We create this old fair value gap. We create this fair value gap. It wasn't old when it was created, but we created fair value gap here. We also come and take out this high. So now if you're a buyer, what would you want to see? Retracement into this fair value gap, continuation up. We close above this high, right? This candle likely opened, came, took the high, came, put in a low. Now people are thinking they fucking struck gold, and they can now get in on longs for the rest of the day, because that is a thing that could happen as well. This could have continued up. It's done everything to where it doesn't need to do that. But the market can do anything at any point, at any time. But it does have specific things that it wants to do at specific times. Anyway, that being said, we wick into here, wick out. Buyers now are like, holy shit, we struck gold, we're about to be rich. They're going to target this next high up here. Never fucking happens. We get displacement to the downside. They're fucked, right? So the sellers are tricked here on this move, like I was. They're fucked out of their positions on this move. Now, new buyers are entering the market around here. And then the real move takes place, right? Also, coming into this, like I said, this is the new day. So this was Wednesday's price action. Today is Thursday. So this, everything beyond this line here is Thursday's price action. There are a few key levels we look for beyond these old fair value gaps and old highs. So if we drop down into the lower time frame, we're going to go down to the 1 minute, because like I said, I mark out these levels on the lower time frame because I like to be precise. You don't have to do that, right? But this is just me. Now the levels I'm looking for are the midnight open, midnight New York time. So this is always the first level that I mark out. And again, like I say, on Webull, you use the 0-1 candle. That is equivalent to TradingView's 0-0 candle. If you line up a price like that, then you'll always be aligned if you are using the Webull platform. So here we have our midnight open. What's happened at midnight? Open, high, comes at a low, right? False move, but on this open, low. Now we're going to set a high. Motherfuckers are thinking this is going to continue higher, which it does for quite a bit. That's really tradable. That's a lot of movement right there. There are many, you can look at this chart and there are many fucking trades you can frame, but I'm just showing you the ones I took and how I took them and the levels I used to take those trades. So beyond the midnight open, we want to mark out that 8:30 candle. Again, on the Webull, I use the 31 candle because really that is the time that it would be when it was 8:30. So we mark out that 8:30 in the morning candle. And you can mark out the New York open candle as well. We'll do it for the sake of the video, but I didn't have it on my chart when I was trading. Come New York open, usually I don't need to mark out that candle because my eyes are adjusted to the chart by then and I can kind of just see it. So in a bearish scenario, right? Why are we bearish? One, why are we bearish again? What all has happened throughout the week? Sunday/Monday creates a fair Sunday/Monday's candle along with Tuesday's candle close, or Tuesday's daily candle has created a fair value gap. We also have a fair value gap down here, or actually, what the fuck is that level? Ah, I know, I'm a fucking idiot. That's the new week opening gap. I'm a fucking idiot. Anyway, disregard what I just said. This is Sunday's opening gap down here. But between Sunday/Monday's candle, which is this candle here, this is Friday's candle, right? And then this is that opening gap. But between Monday candle and Tuesday's candle here, we create a fair value gap with Friday's candle high. So this is something that we've taken into account of. We've traded back into this volume imbalance. On Tuesday, we had a reaction out of it. On Wednesday, we couldn't close beyond it. So on Thursday, what probably makes sense for us to look for? Either we're going to close above that fucking volume imbalance right there, right? Either we're going to close above and we're going to go take buy side, or we're not going to do that. We're going to go take sell side. Where's the closest sell side that we were thinking of is, reasonable for us to trade into? Well, that would be this first fair value gap here, right? If we're going to reject out of this volume imbalance and go take some form of sell side, we want to see us retrace into this fair value gap here. Now, beyond that, we had the fucking new week opening gap, which, as you can see, we ended up hitting, right? But those are the sell side that we are looking at, and why we are looking at it to be possibly bearish and be a sell day to begin with. If we look to the left, what do we have? This is fucking just straight accumulation. Look at this, just sideways. There's not a whole bunch. Can you trade this? Can you frame trades in here? Yes, absolutely. You have to be targeting low hanging fruit though. Like, you're not getting crazy big running trades in here. Today, you have an opportunity to do that. But in here, there's not that much opportunity to do that. Can you trade this? Absolutely. But are you getting moves like you would have today? No. Right? So this right here, this is just larger time frame accumulation. Right? So if we are bearish, what would we like to see? Accumulation, manipulation above the accumulation, which is what we got. Manipulation. And then you want to see distribution, right? And we did. And we did. All the way down below the new week opening gap. And as you can see, we got a little chain to stay delivery here. Actually, not even right there. But down here, yes. Chain to stay delivery down here, but not here. Could this lead to, market structure shift and tomorrow we come target some sort of high and then maybe come take the sell side? Probably. Do we come take the sell side and then do that? Maybe. Do we know? Absolutely not. Will we let price action tell us what to do? Absolutely. Price action is going to tell you what you need to do every time, right? So, again, like I said, coming in Thursday, this is what we had. We had this fake move when we were reviewing our trade. We had this fake move. Judas swing, right? Fake move down, fake move up. That's the Judas swing. Manipulation above an old high. And then we got massive distribution. Accumulation, manipulation above, distribution way below. Way below. Right? So again, if we are bearish, we would want to be selling short above midnight open. Do you get the opportunity to do that? This is midnight open here. Do you get the opportunity to do that? Absolutely. Absolutely. This whole run up. But you'd probably be a lot better if you wait for some sort of buy side to be taken first. Once buy side is taken here, do we get a reaction down? No. What about above this old high? Do we get a reaction down? No. But this old high here, we finally start seeing price not want to. It starts to show signs right here. We start to show signs. So, Jesus Christ. I didn't mean to say it in vain like that. Lord forgive me. But we start to show signs of weakness as soon as price starts crossing this high, right? If we're bearish, this is good for us. Now we're waiting for displacement. Okay, we manipulate up, we get this displacement here on the 15 minute, right? Now we're gonna mark out this price right here, and we'll make it orange. The charts may be starting to look a little cluttered to you, but stick with me. This is probably one of the most valuable fucking 36 minutes I've put on YouTube thus far. So if you're learning something, bro, drop a fucking like. Drop a fucking like, okay? I know you're learning something. I'm teaching you this shit right now. So we're gonna mark this candle close. You're waiting for this displacement to happen if you're bearish, right? This is golden for you. This displacement happens. Where would you be looking to target? Below midnight open. Obviously that's the first target, right? If we're bearish, we want to sell above midnight open and buy back. Sell above, buy back below. And then vice versa for bullishness. You want to buy below and sell above. But are we still above midnight open here after this candle close? Yes. But after this displacement, where are you expecting it to want to go? At least to midnight open. It does that the very next candle. Actually, yeah, it does that the very next candle after this candle close. After you get displacement, it does that the very next candle. We come take out midnight open here. Could we have gone back up? Maybe. Did we do that? No. So trade what we're doing, not what you think we're going to do. And then we just kind of tank and we start going to take out sell side. But I mark out this displacement move right here because you don't get the entry here on the 15 minute. If you wait for a 15 minute retracement into a fair value gap, the only one you would have is this one right here. Do we get that? Absolutely not. We do not. But if we drop down to the lower time frame, all you have to do is drop down one time frame. You could, well, I say one time frame because I usually go from 15 to the 5 minute, but let's see if you get it on the 10 minute there. You do get it on the 10 minute. Fair value gap, trade back into it. That's your short. That's your short right there. Where's your first target? Below midnight open. 20 minute trade. 20 minute trade. Let's not say you capture this whole high, but you wait for us to trade back into the fair value gap. 62 points. 62 fucking points on NQ. Take that with 3 micros. Okay. On a paper account. Don't do it with real funds. You're not ready for that. But yeah, you take out midnight open, you take out this sell side. That's on the 10 minute, you get the entry there. If we drop down to the 5 minute, we've waited for our 15 minute displacement, which is the close of this candle here. There's a fair value gap there. Do we trade back into it? Yep. You can sell short. We've done everything we needed to do. We took out buy side. Right? We had massive accumulation. Like, zoom out. Look at this. Price didn't really go anywhere here. Massive accumulation. We took out an old high. Buy side. Now we've had our displacement lower. Right? All we're looking for now is a retracement into a fair value gap. Fair value gap. You get that here on the 5 minute. There it is on the 3-minute. You can be a seller on any one of these candles. On the 2-minute, you may get scared out of this trade on if you take it on 2-minute, because our gap's here. Our gap's here, but your stop loss would be above the candle that creates the gap, which would be here. So it doesn't even come close to where you should have your stop at. And if you look, price stops pretty much 50% of that fair value gap. On this candle, you may just get a little bit nervous, because say you take your entry here, you've seen price now take sell side once, take sell side twice. There's a little level here, which is the midnight open, and then price starts to move, and it looks rather aggressive when you're looking at it on a lower time frame. So maybe you get scared here. But if you're not a bitch and you do hold that, we never even come back close to it. If we go down to the 1-minute, I'm sure you see the entry there as well. On the 1-minute, if we define it to the 1-minute fair value gap, that would be this low. This candle's low here. This candle's high here. This is our 1-minute fair value gap. Look at that. Look at the beauty in that. Right? So if you wait to be as precise as you can, and you're taking your optimal trade entry in here, say you see this candle print and it doesn't take this high. Now you really know, like, this is where you want to be entering. First off, this is the trade you would take to begin with. Oh, not this. We wouldn't be shorting. I already showed you guys why our bias is bearish in the first place. But you want to be entering at the bottom of that fair value gap right there. Again, stop loss on the high of the candle that creates it. And then our first target would have been this midnight open. Immediately, look at that. 2.2 hour trade right there. Right? 41 points. 41 fucking points. That's $82, man. One contract. One contract. One micro. Right? And that's only if you're targeting to the midnight open. We had a bearish bias. We were pretty confident in seeing some sort of sell-off today. So let's say we just target the next level we have, which would be the top of this old gap here, which I'm sure is just a 1 hour fair value gap, right? Yep, 1 hour fair value gap with sell side here. So let's say that we don't even try to target the sell side, we just target back into this old 1 hour fair value gap. What could we do? What could we possibly do? What could we catch? How many points is that? Just right to the top of it. 167 points. 9R trade. Do you get there? Relatively easy. After we've done this here, after we retrace into this fair value gap, there's no more movement above this. Boom. 167 fucking points, man. Crazy. Crazy. That is sick. Right? That's not even targeting the sell side. What if we target the sell side? That adds another 13 points. 180 points. Right? What if we target the opposite end of the fair value gap? 200 points. 201. 200 fucking points. Right? It's crazy. Now I showed you exactly how the fuck we framed how we framed this trade here. I showed in the very beginning of the video, that's the first thing we did. I showed you exactly how we framed this trade here. Right? We were already down so much, I'm expecting some sort of pullback, especially it being lunchtime. I'm thinking, all right, we sold off. Who's more likely to be punished now? Is it going to be Anyone that's entered short through all of this? Or is it going to be people that are buying down here? Well, we see what happened. Anyway, 200 fucking points. This shit's crazy. That's just crazy. And this right here, this would have been the like A plus trade. This would have been the best trade that I could have taken today. However, I did not do that. I did not do that. After we had this displacement, I don't know what the fuck I was thinking. We had a bearish bias one day. I should have continued to stick with that bearish bias, but I abandoned my bias. I did, and I went long somewhere in here the first time, and yeah, I got stopped out there once, and then again I longed somewhere in here, and I got stopped out there, and that was the second time. And then the third time I it's ridiculous to say at this point. Like, bro, long, got stopped out, long, got stopped out. This time I longed and I was paid for it, but that was I won't say it was luck, because I know what I'm looking for. But if it were real money, I wouldn't have got that trade for sure. I would have taken these 2 L's, likely. But yeah, that's that. Hope you motherfuckers enjoyed. That's 46 minutes. That's all I have for you. That's the fucking review. And if there's anything you guys want me to explain further, let a motherfucker know. I'll catch you guys in the next one. Peace.